the Ghana Stock Exchange continued its rally in May as investors sustained interest in telecoms and financial stocks. The benchmark GSE Composite Index posted a 31.3% year-to-date gain as more first-quarter results continue to trickle in. Mark Jordan Narteh, Research Analyst at Databank, joins me now for the market discussion. Thank you so much for your time today, Mark Jordan. And let me first get your sense of how investors are positioning in the markets in Ghana this week.
Yes, thank you, and good afternoon once again. Yes, so on the Ghanaian stock market, the rally still continues. Like you mentioned, we ended yesterday up at 31.28% year to date. And, the interesting thing about the rally this time around is that we are seeing participation both from the financial stocks and also the non-financial stocks as well. And investors so far are welcoming the Q1 numbers, as most of these numbers have rightly outpaced our forecast for the year.
Yeah, interesting times in Ghana because we're seeing that disinflation continue in the inflation numbers there. And I'd like you to speak to that and how that translates into the equities market in Ghana.
Rightly, so we are back on the disinflation trend, as you mentioned, for the fourth consecutive month. Inflation has dived lower. As I speak to, we are down at 21.2%, and that's about 120 basis points away from where we were in March. Okay, how that translates into the market is that, and disinflation tends to be multi-dimensional. One, how it plays on consumer, trend and consumption, and also two, how it helps firms, manage their costs in order to churn out margins expansion and also good bottom line numbers. So in terms of consumption, we believe that we expect to see the dynamics continue in terms of disinflation. One, from reduced volatility in terms of the currency, and also two, we've seen some OMCs reduce pump prices, which largely tends to fuel inflation in Ghana. Now, with this trajectory, we believe that the disinflation will continue. And what that means for the equities market, one, fundamentally, is that consumer wallets, will now be in a better position, and then consumers, can confidently spend. In fact, when you want to even drill down into the impact, you realize that for the first time since about COVID, consumer confidence and also business confidence index is currently hovering around 100 points. And the last time we saw these numbers were prior to COVID. So largely, we expect that this disinflation will channel into increased business activity. And the other side of it is that with this increased business activity, it should feature into top line growth numbers for most of these listed firms. If I want to go on to give example from the Q1 numbers, you'll note a firm like FML, which has come from a low, year-on-year first quarter growth of about -7 last year to about more than 56% this year. So you could tell similar for firms like MTN and Unilever. So largely, we are seeing this trend in there. And then in terms of cost, we believe that disinflation will churn out, reduce cost of sales and also operational expenses. And then with this, the firm should be able to, increase margin. And again, I'll go back to the case on FML, where we've seen, a huge jump in operating profit margin by about 55 basis points from where levels last seen last year. And so largely, this is how disinflation should also play in the market. The other impact of this inflation, which we are looking at, even though that might not be near term in terms of MPC cuts,
yeah, because I was going to get to that in terms of how that would impact the decision of the Monetary Policy Committee this time around. I see that you're saying that you don't expect to see a rate cut in May, but I'd like you to expatiate.
Okay, great. So in terms of the dynamics, yes, we expect the disinflation to continue, but we want to be conservative or conscious on how it plays into MPC decision. And that's because of the 100 basis points hike we saw in March, coming from that level, and with also other liquidity measures in play, the BOG, coming in to issue a 273-day OMO bill. We expect that they have a wait and see approach where they try to see how these dynamics are feeding into the market. Yes, we've seen the currency appreciate in recent times. We expect the policymakers to, assume a wait and see approach where they try to see how these dynamics are really playing out in the market. So we envision a cut probably later this year in July, rather than this month, despite the disinflation trend. And in fact, if you look at the numbers, you realize that gives the MPC, a good stance in terms of cutting rates. It gives that confidence, and we'll be expecting a deep cut around that time.
All right, now year-to-date return still around that 31% range. Looking into next week, what are some of your sector picks or stock picks for next week for the investors to look at for in Ghana?
Okay, so we rightly favor, the firms which are doing the dividend payout this moment. We expect demand for these stocks to be high. So names like, we expect to see names like Benso Palm Plantation and the gains. Yes, MTN has done its payments already, but given its solid dividend track record, we expect to see more buy-ins for the firm. We're expecting to see Unilever, come in stronger, and the likes of Fan Milk also, given the dividend announcement. So basically, this is what we expect in the market.
All right, thank you so much for your time today, Mark Jordan Narteh, a research analyst at Databank.